Welcome back to Investing in Milwaukee. Today we're going to talk about the Milwaukee rental market. You may have noticed that it's quite competitive for tenants and difficult to rent a good property, but you may not know that we're actually the second most competitive market in the entire US. So I have the data for that. We'll go through it and see how Milwaukee is ranking compared to other metro areas in the US. Then a closer look on where rents are currently. Of course, all that competitiveness is driving up rents, making it really a little bit more difficult for tenants, also from an affordability point of view. And then finally, we're going through what we can expect in terms of rent increases this year and what other people are thinking, some arguments for rent increases and some considerations against rent increases. So that's my topic for today. If you're not familiar with me, my name is Marcus Auerbach. I'm a real estate investor here in Milwaukee for, now going on 15 years. I'm also an agent with Keller Williams, and we have a team. We work quite a bit with investors. And with that, let's get started. As always, quick look at the latest numbers from the MLS. The first number I always have for you is inventory, because it is really a reflection of the forces of supply and demand. And we have a lot of demand and not very much supply. Inventory is up 31.8%. But if you put it in perspective with the numbers below from before COVID, March 2019, or even in the last neutral normal market that we had, you have to go back to 2015, 9 years ago. You can see that back then we had a lot more inventory, and for many years around 10,000 units inventory was kind of normal for our market. So that puts it in perspective where we are at with 2,500. So we're happy about the 31% increase, but it's still a very, very tight market. In terms of units closed, only 1,500, so that's not a whole lot of transactions for a market our size, but pretty much what we have expected. Days on market has changed dramatically over the last few weeks. We have really transitioned out of a winter market into the spring market now. We went from 25 or 26 days on market now to 8. I would say in the last 2 weeks, we're probably more like 5 days on market, which is about as quickly, as rapidly of a velocity as you can physically handle in a marketplace compared to, you see it below 32, 87 days. That is a really crazy velocity. And with that, we have a lot of competition, and we're seeing prices driven up. 319,800 is now the median price here in the metro area. That's up 11.4% over last year. So we're always comparing the same month from last year, because Wisconsin has a very pronounced seasonality, so it doesn't make much sense to compare last month versus this month. You really want to do a full 12-month comparison, so we're always looking back 12 months. And if you look back further, you can see March 2015, we were at $160,000. So bottom line is real estate prices here in Wisconsin have doubled basically in the last 9 years. I'll give you a quick look here at what people are actually offering. These are transactions that have closed here in Milwaukee in the last 30 days, and they're charted out here by price. So here you have 100,000, 200,000, $500,000, and $1 million property values. So you can see the bulk of the market here is between 200 and 500,000. And then this is people that have been able to negotiate a discount. There's a lot of dots right on the zero line here. And then these are all offers that have actually paid over list price. And we can segment that a little bit. And you can see, especially in this segment, 200 to 300, which is really the one of the most interesting ones for us investors. We're seeing 10% up to 18% over list price. So it's a very competitive market. Of course, the higher you go in price, the more moderate offers become. That's just a snapshot. If you want to see the full market update, I'm not going to repeat it, everything here. It's about 20 slides. You can go on my primary YouTube channel, which has the handle at Marcus MKE. There's a lot of information for residential home buyers, and the monthly market update is there as well. So if you want to see the whole thing, head over to Marcus MKE. And you can also check out neighborhoods there. So from an investment point of view, maybe take a look at West Allis, take a look at Wauwatosa. There's some neighborhoods in there that are actually really well suited for investors. All right, let's take a look at rents. So first of all, what's our general state of the economy? We have inflation still at 3.5%. That's up a little bit. Last month we were at 3.2%. The Fed is trying to get us down to 2%, which is kind of an arbitrary number. So I'm kind of interested why they're clinging on to that 2% number. And they're also making interest rate cuts dependent on us getting there. And I have more and more doubts that is actually not going to happen. Because when you look at the consumer price index and how it's calculated, 44% of that is actually coming from housing. So rental prices and home prices are factored in a major way in the consumer price index. And as long as rents are going up and home prices are going up, I don't know if we can get to 2% inflation. So that's kind of an issue, but that's where we're at. Wisconsin unemployment rate at 3.0. It's always about 0.8% less than the rest or the average of the US. So we have generally a very strong job market in the US. That is the second dilemma for the Fed, because they're trying to create a little bit more unemployment as a sign that the economy is cooling down, to cool down inflation. And at the moment, that's not working so well. So we'll have to keep track on that. But very strong job market here in Wisconsin. In fact, we don't have enough workers in the market. So I hear a lot of companies complain they have issues attracting people. And with that, of course, wages are going up. So this is a national number. 4.26% is the latest number that we have on a national basis on wage increases. And you notice that wages are now going up faster than inflation, which is great because that means consumers are gaining a little bit of the purchase power back. But this doesn't go quickly. You have to let that play out over several years before you can basically catch up for what we have all lost in the last 3 or 4 years on inflation. In terms of housing in Wisconsin, we have a chronic housing shortage. So the situation we have right now did not happen overnight. It's been a relative linear development, but now in the last few years, it's become so extreme that the general public is aware. When you've been following the data, basically since 2015, it has been an increasing and compounding issue year over year, and to the tune that we're short tens of thousands of units here in Wisconsin. The WRA is lobbying hard to change legislation, change zoning laws, but that is really a slow-moving train. And when you look at new construction here in the area, there's not a whole lot going on. We have, in Milwaukee County, so there's nothing in the city of Milwaukee. If you look Milwaukee County, which is 19 municipalities, there is almost no new construction. Milwaukee County is almost fully built out. You have to go out to Washington County, Waukesha County, Ozaukee County. There you see, on average, probably about 100 single-family homes being built and for sale. And those are typically in I would say, around 600. It used to be around 500, but now we're more like 550, 650. $1,000, so that doesn't really help for first-time home buyers. It's twice the price of our median home price, so that doesn't really help anything with the housing shortage that we have. We're at this point, we just have more people than we have roofs. That's just where we're at. So with that, buying houses has become more expensive. Interest rates and also rising home prices are compounding together. So I'm comparing here spring 2023 with spring this year. And if you look at the bottom line number, we went from about $2,100 to almost $2,500. So that makes buying a home significantly more expensive for the many first-time homebuyers that we have, which means that, especially with the high interest rates that we're seeing now, again, around 7%, we have more people remaining in the rental space, further compounding the competition that we already have there. All right, let's take a look at some arguments against rent increases. And the first one here is the cost of turnover versus the gain in cash flow. So I don't know if you're tracking your turnover cost, but for us, it is roughly $5,000 to $6,000, depending on the type of property that we're turning over. That is a combination of hard cost and soft cost. So you have hard expenses on contractors. If you're painting, replacing carpet, doing a few upgrades, there's always something. And you have also soft costs like vacancies and loss of rent. So in total, we're looking at about $5,000 to $6,000. That's for us. That number may be different for different kinds of rental properties or depending on the price point where you're at. But my point is, it's not cheap. So it takes quite a while in order to recoup that $50 increase on rent. So if you lose a tenant because of $50, then it may take you 100 months actually to recoup $5,000. So that is something to think about. On the 1 to 4 residential size units, so single families, duplexes, with a lot of duplexes in Milwaukee, you're quote unquote only increasing cash flow. And that itself is very important. It keeps your business healthy. It prepares you for future expenses, but it only increases on the cash flow side. The impact is much bigger, of course, on the multifamily side, because when you're increasing rents and you're impacting your bottom line, your net operating income goes up, and you multiply it with the cap rate, and then you have your fair market value of your property. So that is actually the magic of the multifamily, that by raising rents over time, improving the property, making it nicer, providing better amenities for your tenants, you can improve your net operating income, and that really has a huge impact on your asset value. And then you can refinance or sell, whatever you want to do from there. In the residential world, 1 to 4 units, we don't enjoy that benefit. There's other advantages, and I think that's a whole nother YouTube video, so not going down that rabbit hole here. It's also an administrative effort. So, don't underestimate how much work it is, or maybe that's the reason why you haven't done it in the past, is reaching out to all the tenants, a lot of paperwork, facilitating phone calls with them. Maybe, if there is a discussion, some of them might choose to move out depending on how you're structuring it. And so it is quite a bit of work. The issue is that if you don't do it for 1 year, it's not a big deal, but we'll talk about the reasons for doing it here in just a second. The last point that I have here is retaining good tenants. So given the cost of turnover, of course, this is a consideration. The higher your rents become, the more likely it is that people are moving out, and then you're back to point number one, which is the cost of turnover that you actually have for filling those vacancies and renting them out again. So now let's take a look at some arguments for rent increases. Oops, I've got 2 lines open here. Keeping up with the increased expenses is, the single biggest argument, because it's a slippery slope. It's so easy to, ignore it, because you're not keenly aware, how much the cost of roofing, for example, has gone up over the last few years. If you're not doing several roofs every year, you don't have visibility to that, but your reserves need to reflect that, because at some point you need a new roof. And the cost has gone up. Labor has gone up, material has gone up, insurances have gone up. Now, famously, Milwaukee taxes are big in the news at the moment. All our assessments have been adjusted. That doesn't necessarily mean the taxes are going up. We'll know more about that in October and November. But just with the school referendum, we can expect some increases as well on property taxes. So all of your expenses are going up, and you need to offset that. Otherwise, you're falling more and more behind every year. Interest rates have more than doubled. So for a DSCR loan, you're looking at the moment, certainly at 7.5%. And you want to keep up with market rent. It's not very much over 1 year, but if you do this every year over 10, 15, 20 years, 30 years, it adds up quite a bit. And small increases are easier to handle for tenants. You're avoiding a rent shock. If you haven't done an increase in several years and you're falling so far behind market rent, and then you approach your tenant and say, hey, I need to raise your rent $400, $500, that you're putting them in a terrible position. That is not a good strategy. It's not a professional way. You want to keep tracking market rents, maybe keep them a little bit on the lower side if you want to, if that's your strategy. But it's really bad business to not do any rent increases, and then all of a sudden, when the gap becomes too big, hitting them really hard. Not a good strategy, because they're, for good reasons, are going to be in shock. And it provides additional cash flow to maintain your bottom line, and also do upgrades on your properties, maintain them, keep them in good repair, and also improve them for your tenants. So, and let's take a step back here and look again at the economy. I have here a chart that shows rents versus wages. And so the blue line that you have here is the rent growth. And most noticeably, it's gotten, we have seen during the COVID years, we've seen rent go up a lot. And now we are back basically to more or less flatlining. Wage growth is trending around 5% here. This data point gives us here at 4.7. I think that's a month older than what I'm using. But we came here from about 3 and then jumped up over 6%, and now we're maintaining here around 4 or 5%, somewhere in that neighborhood. So the argument is that it's good that for 16 months straight we have seen wages grow faster than rents. The problem with that is this is a national average, and the average comes out to 0, but when you start looking at individual markets, you get a very different picture. So you can't trust the national news on this because they're just not giving you an actual reflection. Here I have a map that shows you the breakdown. You can see some of the really high-flying markets, for example, out on the West Coast or even down in the South in Texas, for example, or Denver. There are a lot of markets that are seeing rents going down to at a significant degree. When you look at the Midwest, we have a lot of markets where rents are going up to the tune that we're seeing it here in Milwaukee. So overall, as a country, we're probably looking at a 0. It cancels each other out. It's a wash. But that is not the case for us here in the Midwest. So we have a different story here. This is the latest quarterly report from Rent Cafe. You can look this up. It's publicly available. And Milwaukee is here ranked number 2, right behind Miami, Florida. We're ahead of New Jersey. We're ahead of Chicago. Then we have Grand Rapids, Michigan, Oklahoma City, Bridgeport, New Haven, Cincinnati, Orlando, Brooklyn, Virginia, Kansas City, Tampa, San Diego. Silicon Valley is number 20 here. So we're ahead of a lot of the really competitive market. And you would normally not expect it for a Midwest market. And, we've never been in that position, but that's the reality that we have today. It's interesting how they calculate that competitiveness score. So you have here average vacancies. That includes, of course, also turnovers when you have repairs and maintenance that needs to be done. And occupancy rate of over 95%. For the same reason, that's about as high as you can get because it physically takes you time to turn over units, so you'll never get to 100%. We have, and this is a big number, we have 9 prospective renters on every property that is available for rent. So this is where the competition is coming from. This is why when you're posting a single-family home or a duplex or an apartment for rent on Zillow right now, don't be surprised if you get between 50 and 100 inquiries in the first week. Qualifying them is a whole nother story, but the sheer volume of applications is definitely there. Lease renewal rate, 72%. And this is in particularly interesting for me because the share of new units is only a little over 0.5%. So we have a lot of old houses in Milwaukee. There is not a whole lot of new inventory coming on the market, which means that what we have is what we have. There is no influx of additional inventory, which also means that the situation is not very likely to change anytime soon. All right, so what's going on with actual rent? So you have data from Zillow, and it gives you the observed rent. So the difference is they don't know how much people end up actually charging. They only see what is being posted on Zillow and what the asking rent is. In my experience, that's pretty close to the same. And for Milwaukee, they give us here 2 numbers, a year-over-year 4.9% increase and month-over-month minus 0.4%. So for the reasons I mentioned before, I don't pay much attention to month-over-month data. That's just, there's too many fluctuations. Real estate doesn't move that fast. You really want to look at it on an annual basis. So this is probably the better number to keep in mind, 4.9%. And then you can see typical rent. We were here at, I don't know what that is, 950 probably, and now we are over 1,300. So that's quite an increase over the span of the last 10 years. So that's what's going on. We did a survey with local landlords, and we had some interesting findings there, and I wanted to share them with you. So first of all, we asked the people, how many units do you own? And the vast majority are mom and pop landlords. Over half of them own the green share here, they own less than 12 units. And then you have blue, that's the mid-size guys, and then the black belts over 100 units. So that gives you a little background over who these people are that we were able to survey. And what the typical rent is, majority under $1,200 on average. And then you have about a third, that's the blue share here, that is between $1,200 and $2,000. Milwaukee does not really have a huge rental market over $2,000, even though if you look at the downtown apartments and the new high-rises, they're going all the way up to $6,000, $8,000 a month. It is really interesting for our Milwaukee market. Who would have thought that a few years ago? Will you increase rents in 2024? So we had a few people that said no, not sure, maybe not. Some said only on a turnover. Looks like we lost a data point here. This share here said we are going to do it selectively on less than half of our units, and this share is saying we're doing it on more than half of our units. So the vast majority is doing some or all of the units for a rent increase this year. And how much are you going to increase? That of course depends a little bit on how much rent currently is, because $100 or $50 is different on an $800 rent than it is on a $2,000 rent, obviously. But a few people said $25. We had a good share here that said $50. The second biggest segment here is $100, and then we had some that were in between $60 or $75, and then a few are going really steep. I wonder if they're overdoing it, but $100 to $200, that is quite a bit of an increase. So that's the data that I had for you. If you are interested in getting access to the Milwaukee MLS, you can actually go on my website. We have a ton of resources on our website. It's onpointrg.com. And one of the things is you can request access to the MLS. Just let me know what you're looking for, and we'll be in touch and set up a login for you on the MLS so you can start browsing there. You have my contact information here. A lot of people reach out to me with an email if they're watching some of my videos. And so with that, if you're on the live call, we're going to switch over to Q&A, so you can unmute yourself now, and we're going to have a little discussion. And otherwise, thank you very much for watching, and I'll see you at the next one.
I have a question. How do you find comparable rent prices to know how much to increase?
Yeah, that's a great question, Alexandra. There are a lot of different ways. The best way, in my opinion, is actually to go mystery shopping. And I'm a huge fan of that. I would recommend it. Being an agent, I'm out there all the time, so I see it every day. If you're a property manager, you have the same experience. But if you're an investor and you want to know what rents are, just check out your competition. Pretend you're a tenant. Call rental listings on Zillow, on Facebook, on apartments.com that are in your area that kind of look like what you have, and just ask if you can, tour the property. Maybe they're doing it open house style like we do, where everybody gets scheduled on Saturday at 2:00, and then, just go through there and look at it. You will be absolutely shocked by what you are going to discover when you tour 3 or 4 places, because the perceived value that you're getting there's such a crazy difference. It's also good to walk in the shoes of your tenants for a little bit to see how that looks like. You can check out the application process that out there doing bad. So that would be, in my opinion, the ideal way. Second best way is to look online and study rental listings that are coming on the market. Be mindful, there's some out there that are just grossly overpriced, and they will be just sitting, so don't pay attention to them. The ones you want to pay attention are the ones that are coming and going, because they're actually on market. I think the worst way of gauging rent is by looking at an app or at an online tool, because that app or online tool, even Rentometer, has no idea how nice your apartment is. So, you have to take it with a grain of salt. We're consistently, I would say, between $200 and $300 higher than what Zillow would be recommending. So I have very little faith in these online tools. You have to put the effort in there and educate yourself, or ask somebody who knows. Your property manager is probably a good resource for that. Mike says, if self-managing, what do you find the best way to communicate a rent increase? In writing, for sure, because this is not a good phone call. We try to not communicate with tenants at all over the phone. If then, text message calls are only scheduled. Sometimes there is something that you better discuss on the phone. But this is not one of these opportunities where you want to be on the phone. I think this is where you actually send a letter. You can use these forms here. I threw one on here from Wisconsin Legal Blank. You can just give them a notice of rent increase, or you can let them choose rent increase or vacate. So whatever you do, I think the written way is the better one. I would include a little letter that says, hey, we appreciate you being great tenants, and we're trying to keep rent increases low as possible, but we're facing cost increases and insurance and taxes and whatnot. So we have to pass on a little bit to you, and this is why here's your rent increase. And then, they can read that and take it, some time to actually digest it. And if you're on the phone with them, you're confronting them with that, they have no time to think about it, and what are they going to say? So my personal opinion is I would go the written route, send them a nice letter, appreciate them, explain why, and say, hey, this is what it is, and you can make your choice.